I think this is always been my favorite panel on Unwind, which is hearing from where the money flows from, which is the VCs and the investors. They always have really high-level great thoughts that sound really, really knowledgeable. So it's always good to hear from them and see what they're thinking on the RWA space. I think we have a really well-balanced panel today. I know Juliet and Simao both are very hands-on in the Web3 space, very close to the builders, do a lot for them. And I think Luca, Illuminate has a really, really great track record on both the Web3 tokenization side, but also the Web2 fintech side. So I think it's a very good balance when we talk about institutions, retails, and Web3 all together. So thank you, everyone, for being here. Just a quick intro. Maybe we'll start with you, Juliet. Just tell us a little bit about yourself and your fund.
Now it's working. So hello, everyone. My name is Juliet. I'm a fund partner of NewTribe Capital. We are the fund which is based in the UAE. We are one of, might be the earliest who started there as a Web3 fund and still keep active. We have a portfolio of 250 plus companies probably within this period of time. And looking at multiple sectors, including RWA as well.
Hi everyone, good afternoon. My name is Luca from Illuminate Financial. As Milind mentioned, I probably represent a more, I guess, Web 2.5 view here. We primarily back enterprise and B2B tech companies and financial services. We have about $500 million under management, primarily from large financial institutions, including JP Morgan, BNY, Citi, and others. We've made some investments, about 40 companies in total, but about a dozen of them are in digital assets, and we can talk a little bit more about it later.
Hi everyone, my name is Simao. I'm a GP at Lightshift. We are an early stage fund focused on Web3 technologies, and we pretty much try to position ourselves as a third co-founder to these companies. So we invest at the earliest stages, and then we leverage our mostly engineering expertise and technical expertise to help these companies build, get their first MVP, and then help them go to market.
Excellent. Again, thank you for being here, all of you. So I think my first question is going to be more personal. I want to start off on a relatable note. So when did you guys personally come across RWAs or tokenization as a concept? When did it really come home for you or your fund as a thesis? When did it all start making sense? You know, if you could add a story to that, that'll be excellent as well. And it could be something like stable coins, I'm sure. Most of us have felt that.
For me, the story started like from the fact that we are like based in the UAE, and interestingly, that over 80% of the whole transactions generated in the Middle East are made by institutional players. So, and it's all like now UAE is the leader in terms of the regulations, and there are multiple things happening on the government layer, where like, you know, it's a part of government strategy, like digital strategy is the part of what government want to bring into the space for sure. So that's why, of course, it made me think about like what we could do in the Middle East and what's happening there. And especially like real estate market is booming up there. And of course, it's the perfect case that could be generated. But my story was like, of course, like we started to talk about it, then regulation started to scale, and there were like a few like practical use cases happening. Unfortunately, we are not in the stage that we can cover everything within RWA space, but we got the opportunity to expand. And of course, like the way I came across RWA was like as an extension of DeFi. So that was the kind of, you know, transmission period that people realized that DeFi, and instead of DeFi, we need to have something tangible. And then people started to think like how we could make it happen and what we could create in order to make it happen. And so what I looked at is that, of course, like first of all, initially is like something like a private credit market, and RWA initially is an extension of traditional Web2 space. Because, well, I'm from Web3, and for me it was something like new, because we do invest in technology. We of course, we estimate the speculation model within everything, and then it comes to something which is tangible, which is backed by something, then you can't generate like that kind of profit that Web3 investors got used to generate back to the days, like we are talking about the previous bull run. But yeah, that was something we decided to look at, and then with the regulations of forming in the UAE, with like, you know, a few companies receiving VARA licenses and ADGM and everything, so we started to explore. So we've got into the few companies, now we're exploring more, and we see like more segments where RWA making sense right now. But I believe it's going to be like a few other questions when we can elaborate. But that's in general my story.
For me, it was actually, I think, on one of the first opportunities we looked at in 2016. So actually, this is before RWAs, but actually it helped us understand what doesn't need to be tokenized. And we evaluated a seed opportunity into a business called Baton Systems, based out on the west coast in the US, and we didn't end up investing until the Series A. But essentially, they built a peer-to-peer FX platform for interbank, so only for large financial institutions, completely on a private permission chain that doesn't actually tokenize any of the flows. And today, they settle most of the internal flows for HSBC. They settle most of the FX between HSBC and Wells Fargo. So massive amounts of benefits around efficiencies, around speed to settlement, around netting, etc., without actually requiring any kind of tokenization. So that I think highlights a lot of our view around this space, is really trying to understand the underlying kind of drivers of these use cases on the institutional side, and what is going to get some of these largest players in the world to onboard and actually move volume at scale onto these platforms. The second and actual proper RWA investment that we made was in a business called Pontoro, also based out on the West Coast, which is building a tokenized real estate debt fund, and that was, that started and on public on Ethereum. So it is there. It's really recognizing the challenges of a very large market, is also institutional only, where things take not days to settle but weeks to settle. And it moves in very large volumes. So that's kind of how we think about the opportunities and how we evaluate.
Yeah, for me, the first time I got in touch with RWAs, or the idea of it, was actually a long time ago. So in my previous career, I was working in investment banking, and I was in charge of like the digital strategy and innovation division. And I came across this project in which we had to rebuild our whole bond platform. And so the bank was trading millions and millions a day, and this was just like a small investment bank, in the whole world. And so I started going through the project, and we had to connect to all these exchanges for liquidity. We had like to connect this to the users, how this would like settle in their accounts. And then I was just astonished when I saw that, every single day we had to report to the regulators who had these bonds, how many were sold, and where they were. Because most of these bonds were being traded OTC. And I was like, wait, so you were telling me that this whole industry is pretty much built on Excel files around the world that are pretty much the same thing for the past 30 years, and everyone is trusting our words to say where these assets are. It's like, these can't be, right? So that's actually one of the reasons why we created Lightshift was, okay, first of all, let us invest in this new technology that is going to power this whole new world, right? So infrastructure, scalability, the proofs, the regulatory side, like all those tools that you need. And then let us invest in the applications that are going to be built on top of it, right? So DeFi, RWA, all of these new services that definitely have to come if we want more liquidity, if we want to reduce settlement times, if we want to improve efficiency and save a lot of money on all these costs.
Yeah, I think with that answer, Simao, it's very clear why you call yourself the third founder, because that was very, very hands-on that your thesis emerged from. So that's great. I think more for the Web3 guys, right? You look at this space, there are so many competing narratives. Where does RWA fit in like more of a medium-term, long-term view? Because like personally, I feel without RWAs, what does Web3 even do for this world, right?
So I want to just like to give a brief and like for us remember the history. So I'm in crypto from 2017. And I remember like 2018 and 2019, I was in China. And there was the STO, so-called STO boom. So lots of companies, they went to China and they pitched their like, tokens backed by like a company shares or any assets. So that was like the first move into the RWA space. But I can tell like lots of people say, of course, like all these STO booms failed because there were no regulations, but unfortunately, I don't think so. The main reason for it to fail was the lack of infrastructure. Because what it means that if we are talking about RWA, it's the whole new industry, right? So for crypto, for Web3, we have all this centralized exchangers, decentralized exchangers, different types of marketplaces. So if we want to operate within the space, we know where to go, we want to know what to do, and we can learn how to make money out of that. And it's affordable for almost everyone, and there are multiple YouTube videos, so it's accessible, it's democratized, and that it's all about Web3. When it comes to the proper RWA space, so first of all, like, let's assume we are like a crypto bros, right? So we want to do something that there are no like regulated exchangers. There are no like, because first of all, I'm advising the government in the UAE as well. So, and we tried to build the regulation. So I was the one who tried to create the business infrastructure before putting the regulation, and then how it could be structured. So the main thing is that you need to connect the dots, like if it's going to be the exchange or if it's going to be the marketplace, what is the form, how we receive the data, how we project the data, it's like an indexes, what form of RWA we want to present. Like UAE market is the biggest commodities market, of course, and how it's going to be linked together, who we're going to sell these RWAs. So that's the whole thing to be discussed before we unveil all the $1 trillion opportunities that people are talking about. That's the most important. But to talk about the basics, the very basics, and the niches to be covered, like of course, like real estate, it's number one. Commodities, that is. And there is another sector actually, which for me, it's the most interesting, and there is one project on Solana we are planning to invest. It's called like, it's funny, but it's about agriculture. And agricultural industry, it's where RWA space exactly makes sense. Because first of all, I met with a few traditional VCs who told me about the necessity of making something like a marketplace or the exchange. They can just trade some agricultural product because it's the whole process of supply which requires timing, and it would be great to tokenize it and to get like a certain capital injection on the regular basis. And of course it's all proven, it's all like they can provide all the financial reports. And then there, again, we are coming to another niche to be covered. It's how to make the proper due diligence or the proper research of what is going to be injected in the Web3 space. So that is another layer. And and I try to dive deep into not like a traditional financial products, but it's something that people are considering as well, watches, luxury markets. There are multiple niches that more kind of understandable for Web3 people. So that's why I just like try to cover that space.
So I hear real estate, I hear commodities, and agriculture as part of that. I think we've got some agri-commodities and Polytrade as well. But Luca, where are you seeing, like which asset classes are making sense in the tokenization space?
Yeah, so for us, I mean, we looked at a lot of STOs as well. Didn't invest in any at the time either. Look, we've seen this, the arc, right, of starting from stable coins, moving into yielding assets. But ultimately, I think what we see in the market today is still very much a service to mainly crypto native individuals. It hasn't really translated into, mass market institutional adoption. I think the types of challenges that we like the most are the ones that are, heavily regulated spaces, and also that have some of the deepest inefficiencies. So we look at, like private credit, loans, especially in the US, take 14 plus days to settle. By the time it actually settles, it's changed hands over 70 times, right? And to your point around having to keep track of where everything is, it's an absolute reconciliation nightmare. So we look at a lot of those types of initiatives.
Simao, in terms of asset classes, which ones are top of mind for you in RWAs?
Yeah, so I think there's a component of, there's like this big thesis in RWA of trying to bring liquidity to all these new assets that were once just owned by one person, right? So I think, in the past, you almost had like assets where you have to go to a certain place, geographically speaking, you get to know about like this new asset, and now you can get access to it, right? Then a few years ago with the internet and more information, you kind of like, you can hear about like some things somewhere else and you can get access to them. But right now you can be anywhere in the world, you can hear about like a new asset and you can also get a fraction of it. So I think that's like the lowest hanging fruit for everything that we're seeing, and anyone that can get like an idea around it will start playing with it. I think the most obvious use case that people have tried to play with since like 2017 is, for example, like real estate, which has become more of like a regulatory issue rather than like a technological or business one. And from there, I think we'll start moving like to debt assets, right? How can you like raise capital in different formats from much bigger liquidity pools? And once you get that, like you'll be able to rotate portfolios, get access to other types of yield. So I totally agree with Luca. I think like the first part will be coming from like crypto natives, products with like less regulation, more liquidity. You can just like get access to them. And then we'll be moving like the whole spectrum to an end game where we have all assets on chain. They're probably like all regulated, and you can have users and big institutions playing with them.
Yeah, absolutely. And I want to break this down on another axis, which is retail versus institutional, right? I think some of the use cases are very retail focused, which is fractionalization, for example, and luxury items. And then there's an institutional use case to this, which doesn't get as much attention in the Web3 space, especially. To someone starting now, what would you say they should attack? Is there appetite on the institutional side? Maybe Luca, are you seeing a lot of big banks wanting these services, wanting to come and try things?
Yeah, look, I mean, I think banks are obviously going to be asked to try and cut costs, drive efficiency, improve distributions, all within the frame, and the guards of the regulation and existing technology that they have, though, right? So they're not going to be the quickest movers, and that's why you see retail adoption coming first and foremost. You are starting to hear about some projects getting to, I say, somewhat meaningful scale, although there's still a long way to go for it to be at what I'd probably call like institutional with a big I. But you see HSBC and tokenizing gold, you see JP Morgan and tokenized derivatives and things like that. It'll come. I think at the moment it's still experiments. I think there's still a lot of hurdles to cross around the banks, touching the proper decentralized space. I mean, obviously you have KYC, AML, and all these issues that you need to come across. So a lot of it is going to be ring fenced in these walled gardens that allow them to control what happens. But as long as you do that, you can't get to that bigger, that bigger opportunity. So I think, retail is where we see the experimentation first. The one thing I layer on top of that, and we don't really invest in anything that's retail directly, but a lot of these propositions, are ultimately touching wealth. and wealth propositions in most markets are very heavily regulated, right? So when you look at any marketplace, et cetera, that's starting to offer things that are considered alternative investments, you think about accredited investors, AIFM regulation in Europe, there's a lot that needs to be crossed to be able to properly access the full market, and that I think is actually a similarity between both institutional and retail in this sector.
Yeah. And I think we see the same thing while, we work with the likes of MasterCard and through them with bank. It still sits at the innovation team level, right, at these banks, and it's not with the business teams yet where it really gets adopted. And it's more trial and error. But what about you, Juliet? Do you think retail is going to come first for RWAs?
Well, yeah, I absolutely agree. Exactly. The problem right now, and what stops actually lots of investors from investing in RWA space, because we are not at the point that it's becoming scalable, because the first thing we need to do is to convince institutions and banks that it's brings them value and it's credible. So that's the major goal. And the way to convince that is to provide some traction which might come from retail, because they see that, okay, people are using that, people like that, there is a good product, so they can keep it as an addition from the traditional financial business that they are doing. So that's why RWA makes sense as an extension of DeFi, which for example, crypto people, they do understand. And that is a kind of, also the niche which could link the retail and institution to come into the space for sure.
Actually, just to add one point to that, around that traction for the institutions, speaking to a lot of the banks here in Singapore who have done trials on bond issuance, or tokenized bond issuance, and they come back and they say, the client will ask, is it cheaper? Do I get a better rate if I issue on a token? No. Do I get better distribution?
Yes.
No. Is it faster to settle? Maybe, but you still need to go to the depository in the end because it's all digital twin stuff. It's not actually issued on chain. So actually, there's no benefits at the moment. And then I think that's why it gets stuck in the innovation departments, because until you can convince the business that there is value there, it's going to be very difficult to scale.
Yeah, and I could add on top of that I think a lot of investors are talking about apps and new iterations on products that we can deliver to the end customer, right? But I would actually make the point that we're still very far in terms of infrastructure, and I think the easiest example is if you try to imagine a meeting at BlackRock, right? And there's a guy that will come up and say, hey guys, why don't we put all these assets on chain? And they're gonna look at it and, well, so how many assets do we have? And BlackRock, you look around, yeah, around 9 trillion, right? So, and how much is the market cap of Ethereum? 250, 270 billion? Okay, so we actually have almost 40 times the number of assets that Ethereum could hold. And you look at proof of stake, right? And okay, what then happens if the price of Ethereum crashes 50% overnight? Oh, so we maybe have actually 80 to 100 times the number of dollars that Ethereum can hold, right? And so, in terms of infrastructure, you look at, proof of stake, how do these machines work? Are they actually gonna stop or not? And when you put, on the other hand, that institutions actually have to let go of the control that they have over the infrastructure, pass some of the revenues that they can have, it's actually pretty scary for them, right? And so I think that's one end of the spectrum, is kind of infrastructure. We still have a lot of work to do there. On the other hand, I think most investors are right now asking themselves how to get exposure to the actual institutional RWA assets, right? Because, you look around and what were the most profitable investments so far? Maybe Circle, right? And nowadays that's kind of centralized company, the custodians, right? Anchorage, Fireblocks, and all of that institutions are using. But then you look around and it was probably Coinbase and even BUIDL by BlackRock, right? Most of the new stable coins are built on top of that product that is fully centralized. So can you actually go there and take a big chunk of a business that all these institutions are going to use? Or at the end of the day, is this going to be owned by JP Morgan, BlackRock, and the usual suspects?
That's kind of how I think about the market opportunity, right? Like you look at reports and it's 3 to 30 trillion of assets by 2030 is kind of what you read, right? But reality is actually call it a 1% fee on it. If it's AUM based, you're looking at like 30 to 300 billion of revenue. So that's in 2030, and that's actually like what, one Microsoft or an Apple today. Right. So then to your point of actually how much of that pool of revenue can startups actually get versus institutionals, very, very optimistically call it 25%. And in reality, you know, you might end up in a world where there's 30, 40, maybe 50 billion of revenue that flows to these companies. Again, you know, Pareto principle, it'll probably be 2 or 3 that get the most of that. So that's why I guess, you know, there is a bit of venture skew to it. There might be 2 or 3 companies that are created that can reach that, you know, 5, 10, 20 billion of market cap and return some funds. But it's a tough market to identify, right? And there's a lot out there. There's a lot of excitement, a lot of opportunities. So picking winners is very, very difficult.
I think just to be a devil's advocate there a little bit, I think there might be new pockets of monetization for assets, right, which are still not monetized. I think we spoke a lot about Pokemon cards for some reason on the institutional panel last time. So that, for example, right, there's no incumbent at all. And then there could be access, right? I don't think that JP Morgan is taking these products to, say, Africa or Turkey, right? Maybe there are some, I just want to leave the builders here with a little more optimism than that, maybe, but maybe those pockets exist. Juliet, what do you think?
Yeah, I just wanted to add that, you know, then we talk about Web3, it should like, we assume that it is decentralized by default. But as it were said, for institutions, like it is secure to keep it in a very centralized manner. That is, then you have something in a control, and then you put it on chain, you're like a provider, like you make it decentralized, then the question of security arises, right? I'm going back to this Bitcoin infrastructure because everyone is like, oh, the most liquidity in Web3 is within Bitcoin, so we need to build something upon Bitcoin. The same problem, like the most part of the liquidity on Bitcoin is with miners' hands, and they don't want to sell that. And they don't want to operate like within it, because why? Because it's not secure, and there is no proper secure solution to make it happen. Then you understand that you will never lose your funds because it would be hacked. There are multiple things could happen to that.
Absolutely. I think probably the last question here, I'm going to change gears a little bit for, you know, a lot of RWA builders who might be attending or might see this in the future. Where are you guys actually investing in RWAs? What would be something that interests you when someone comes up? You know, it could be about the team, it could be about the project. What would be interesting to hear from founders today? Anyone?
Yeah, I can start with this one. Yeah, so at the firm we have this idea that, you know, it's very hard to find like an unholy grail, or at least like a way of looking at all investments the same. We actually approach it as if we were kind of like a machine learning model, and we're constantly trying to refine it. So for each project, and it can be like even within RWAs or around a certain area, we always look at, okay, what's the variable that is going to account for most of the success of the whole model, or what's kind of like the parameter that can predict most of the model. And that completely depends, right? And it differs a lot. It can be like team on some projects, it can be like business, it can be tech. And we actually make the point that, you know, for us and for our model, I would say in RWA, if we can look at some of these things, I think there's one that has been growing more and more that is actually like the legal side of it, right? While we were like looking at like technology and you know, scalability, interoperability and all of that, and most people were never like seeing legal in the equation, I think in RWA we're, you know, being a lot more careful about, okay, can these actually be used by these institutions, by these clients all around the world? Because as we see like a lot of fragmentation, because of the technological stack, right? You have like way too many chains, you have way too many like standards of tokens, so on and so forth. Can you actually like bring all this liquidity and interoperability? We believe that, you know, regulation is going to be one of the main fragmenters. And so all these platforms that can almost like embed this and bring this to the user and create like a unified format, that's going to go like miles and miles. So a good team, a team that can like put this in place. We're seeing more and more teams with different skill sets, right? So more people on the legal side, probably like a CTO that may not be like the biggest expert in like ZK proofs and validators and like all these like low level things, but he understands kind of like how a financial institution works, you know, like what is kind of like a principal, yield, like these different things that all make an asset. And then someone that is like very, very good on the business side in terms of like distribution, putting a good product together that is well received by, you know, institutions and users when it comes like to yield and all these considerations in one. So I would say no holy grail, but always looking at these different things. And if there's something that would jump to mind, it would actually be a strong legal side of things.
Yeah, on our side, you know, we are seed to Series B investors, but most of the projects in this space tend to be on the seed side. So as you'd expect, the most important thing is team. Even in these decentralized projects, the people behind it are the most important until AI takes over everything and things get developed on their own. I'm still waiting to see that. But I think when we look at this sector with an institutional lens, obviously given our background, there's three kind of things that I look for in terms of what the company's focusing on. Is it, you know, access? So is the institution using this platform getting access to assets that it couldn't get access to before? Is it distribution? So can the organization access customers that it couldn't access before because of the benefits that the tokenization brings? Or is it efficiency? So, you know, settlement process is very expensive. Is there a way to cut costs 10x because of this technology? So it has to kind of hit on primarily one, you know, maybe two of those points, and then it's having a team that's really thought through, you know, what is then the underlying moat that this company has long term? Because, you know, is there some, you know, special way that they are sourcing these assets that means that it's very difficult for someone else to do that, et cetera, et cetera. So those are the vectors that we tend to think about when we're evaluating opportunities here.
So we invest in Node Station. For us, what makes sense as of now is, as we discussed, the private credit market, but it's more like a Web 2.5. We can't say it's a proper Web 3. So we invested in like Helix. It's exactly private credit marketplace as of now. And what I believe will make perfect sense in the future, it's of course commodities, because we have so many barriers to get an access to commodity market. That's first of all something that contains the supply chain. So like I spoke with a very nice project, they do gemstones business. And there is also the whole supply chain, and they have to raise funds, and they can prove everything. The same as like agriculture. And there are multiple businesses like that when it really makes sense to make it tokenized. And you understand by getting the access to these businesses, there are almost zero risk for you as an investor to get into the space and make some profit within a certain period of time. And the one thing and the one niche we did not touch is sustainability, and especially private credit market. And where like I believe there are like some certain moves, especially in the UAE, and that's the first thing. It's just like an entry to commodity, and it's a huge market, of course.
Yeah, there's a lot of capital on the sidelines in sustainability for sure. I think that brings us to the end of the panel. Thank you so much for being here and for sharing your thoughts. And I think we have a keynote right after this, so stick around, guys, and thank you again for coming in.